Hi, this is Zach May with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 2nd of June. Starting off with the FTSE 100, which has managed to revive itself at the end of the week. We broke that mini resistance line there from a week or two ago at 82.40 and above that, looking for hopefully a retest of 8400 plus, obviously the record high 84.74 sometime during the course of June. If we do break down, then the floor of the channel there from back in February at 8200, worst case is a test of the 50-day line. 81.10 is required before this market revives itself properly or fully. In terms of the RSI, we're back above neutral 50, so unwinding that break of the uptrend line there from back in January, which was not a great signal, it has to be said. Moving on to the DAX, and here we're still consolidating basically at and around the old March-April resistance, 18,500. Got support there at the floor of the channel, 18,300, and the 50-day line. Worst case scenario at the moment is that we have to retest May support rather at 17,800, but looks as though this market's strong enough to stay within that rising trend channel from back in the autumn. On the upside, if we do clear the upper 18,000s area, then we do have 19,500 potentially on offer as soon as the end of this month. RSI just about on the wrong side of the neutral 50 level, so if you're fussy, you'd want to see an end of day close for that above 50 before assuming we've bottomed out after the recent retracement. Moving on to the Dow, and a good end to the week, which gave it a good end to the month as well. Obviously, here we bounced off the floor of that rising trend channel from back in September. Obviously, exactly where the floor was a bit of a moot point, but we've also found support at a higher level than the initial May support there, 37,800, which is a plus. Just missing an end-of-day close above the 50-day line, 38,800, to then give us a chance of retesting 40,000 plus sometime during the course of June. Maybe for the end of next month, if it all goes well, then 41,700 at the top of that rising trend channel from September could be on the cards. But probably need to wait now for the RSI to get back above neutral 50 versus 45 and the 50-day line before getting too excited. Moving along to Bitcoin, and here you can see that we've got the market consolidating above a now rising 50-day line, 65,000, and also above the floor of that rising trend channel from November. We're hoping that the longer we stay above 65,000, the greater the chance of a move to record highs or retesting record highs, 73,800 sometime during the course of June. For next month, obviously there is the possibility of a move to the top of the rising trend channel from back in October as high as 87,000. But obviously at the moment that seems a long way away. Worse on the downside, still regarded as being around the 60,000 area. RSI remaining above neutral 50 at 52, which is positive. On to gold, and still trying to recover from the double top through 2450. The chance is that we will have to test the 50-day line, 2335, and maybe even the floor of the rising trend channel from December, 2275, before this market gets back into gear. The RSI now breaking below the neutral 50 level, so that is why we're looking for at least the 50-day line to be tested and possibly 2275, 2280 and May support. Moving on to the stocks, and a stock which I haven't covered for ages, which is Advanced, and here you can see that we've got progress within this rising trend channel from the turn of the year. Top of the channel there, heading for £1.65, and we're looking for that during the course of, well, the early part of June. If we get there, then the next level up could be as high as £1.92, which is the upper parallel of that channel, and looking for that by the end of next month. But a great trend in the shares that we've had all year, and unfilled gap to the upside at the end of March, and that really finesses the strength of this market. Moving on to Beacon, and here we got the first signs that we're in a rising trend channel base after gapping down back in February. Initial target here, the top of the channel there at 0.07. Ideally, we fill that gap up to that level, the gap down from back in February. Strong price action at the end of the week with the shares opening at the low, closing that high on Friday and beating Thursday's high. We also got the 50-day line rising as well. So pretty good technical setup, even though it's still a little bit fraught at current levels. Moving on to Bushveld, which is also reviving itself. Looks like we've got a cup and handle type of reversal here. Nice U-shaped turnaround, breaking the right-hand side of the formation there, 0.73 and above that, looking for the shares to easily fill the gap down up to 1.07. Best case would be up to 1.5 pence by the end of next month. Only back below the 0.6 pence area, really delaying the upside scenario. Moving on to a stock which I really just started following or covering recently, but seems to be very much in recovery mode. We had a gap higher for Cirata during the week after a very strong hammer candle, and basically fast approaching our initial target there at 82 pence. The other thing to note is that we've got a potential April rising trend channel, top of the channel there, as high as £1.10, and we're looking for that by the end of next month, while we remain above resistance on the way down around the 67 pence level. So 67 pence support, and then 82, and then £1.10 potentially on offer at Cirata. On to chill, where I see on social media somebody suggesting that this week we'll see some kind of decent development, or a development anyway. Here we've got a potential rising trend channel base. If you're cautious, you probably wait for an end of day close above the 50-day line at 2.3 pence, and then that would lead to potentially 3.6 pence by the end of next month. Obviously, we don't want to see any breakdown back below the 2 pence level and that uptrend line from February. Otherwise, we could be looking at a premier type of situation where we had a rising trend channel base and then just gap down through the floor of it, and that was the end of that potentially. Moving on to a stock which is in a rather better place, which is Essensys, and here, nice end of the week. We broke that little wedge that we had from back in March, around 17 pence, and the longer we stay above that, the greater the chance of a move, not only to 27 pence early this month, but also as high as 44 pence at the top of that broadening triangle from July last year by the end of next month. Moving along to Greatland, which is still trying to revive itself, which is decent. Here we've got a V-shaped bull flag, as I call it, bouncing off the 200-day line at 7.4 pence. Initial target here was, and still is, the 8.8 pence level. In fact, that's the second target that we had. First one was 7.5 pence. And then above 8 3/4, looking for up to 11 pence, retesting the December peak by the end of this month. But the key here is holding that 7.5 pence zone. On to gold and metal, which seems to be rising by the minute. Here you can see that we're very close to hitting our initial target here, which is an initial recent target here, 23 pence, which we were looking for by the end of this month. In fact, now we can upgrade it and say that we're looking for 31 pence, the upper parallel of that rising trend channel from September by the end of June. Upside value while we hold above the 18 pence area, and obviously we're counting on no fundraising being required anytime soon. Speaking of fundraising, we had one recently at Metals One, and the shares seem to be back above that 1 pence placing level. The longer they do that, the better in terms of a potential recovery in the shares filling the gap down that we had last month up to 1.3 pence, which is now our target for the end of June, the longer we stay above a penny on Metals One. If gold and metal's doing well, then it helps Power Metal, because it's one of the largest shareholders, or is the largest shareholder. Here you can see that we've got a rising trend channel. We've hit our first target there, around 17.5 pence, which is the March resistance line projection. Above that, looking for as high as 26 or 27 pence by the end of this month, while we remain above recent 15 pence broken resistance. I interviewed Roadside a couple of weeks ago, and the shares going from strength to strength. We haven't had a red candle for weeks. What's also noticeable is we've broken that March peak at 12 pence, and the longer we stay above that, the greater the chance of moving not only to the initial target there, or the second target there, 14.3 pence, but also as high as 23 pence perhaps by the end of this month, which is the upper parallel of the upper parallel line. We've already had the golden cross buy signal back in April. Moving on to a stock which we've got high hopes for actually at the moment, Southern Energy. The reason for the high hopes is that we gapped down back in November, and we've gapped up twice in May, so that's a bear trap island reversal after gapping down to new lows. Initial target here, obviously the 200-day line at 14 pence, but really what we're looking for here is 23 pence by the end of next month at the top of a broadening triangle from back in August last year. You can see that there's a initial target there around 18.5 pence at the top of the November gap. On to the last four, and starting off with surface transforms, which is appealing at the moment on the basis that we have a break of recent neckline resistance. That was at 1.57 pence. The longer we're above that, the greater the chance of move to 2.7 pence as soon as the end of this month, which would be quite a result for holders. But obviously we need to stay above that 1.5 pence area. Moving on to sovereign metals, where there is joy all around, given the way the shares have finally emerged from their recent 20 to 30 pence range. In fact, breaking that line of resistance there from April last year has helped the cause, and above that we're looking at 37 pence and a 2022 resistance line projection as soon as the end of this month. After that, really looking for a relatively swift retest of April 2022 resistance, hopefully by the end of next month, near to the 50 pence area. Ideally, we stay on the right side of 28-30 pence in the meantime. Moving on to Tirupati, where we've got a mix of fundamentals and technicals, quite an aggressive one as well in terms of the fundamentals, but on the technicals at least, it looks as though we've got a mid-move consolidation here, either side of 7 pence, and a break of 8 pence could easily lead to 11 or 12 pence at the upper parallel of that broadening triangle from back in March. Ideally, we stay on the right side of 6 pence from now until the situation is resolved. Finishing off with the stock which rose this week, I believe, on no news, which is normally healthy. Here we've got Wildcat breaking the 50-day line there at 0.17. Above that, we're looking for a return to the top of the range, 0.35, by the end of this month, and ideally we stay above recent broken resistance at 0.17, the initial May peak. That's it for me today. More updates during the week.